Thursday. Today is December 6th, live harmonic trading. Market's down another 2% in the pre-market. You got stuff like S&P and, we talked about this on Tuesday, and everybody, this is why the Type 1 and the Type 2 framework are so critical. Here's the 4-hour. There's our deep crab. We've talked about that Monday, Tuesday. Remember we said 28.11 was the check back? And that was on a daily basis. And do take a look at the daily. The pattern on the 4-hour here, this crab pattern, we're going to complete it. That's where we're going. We're trading 26.61 right now. The full retest is minimum 26.26. That's for today. And in fact, today's going to be a short session because pretty much all of the scenarios we've been talking about are about to hit. And I want to be fully engaged today. Here's what happened overnight. Big drop on whatever. But, this is indicative of the larger symptoms that have been really cracking since October. And that's what I've been saying. You look at this weekly chart. Just let's get clear on here. We have to go back to 26.26, okay? The weekly, not much here. Little HSI, but this is ugly. I mean, this is just... That's just some remarkable action. And we're going to watch out. We still have to consider, as I said in last month's report, that if that 26.26 fails, be prepared to see this go as low as 25.75 at the 886 for the year. There's really only two levels we need to consider today, folks. It's been that way for a while. We had the pattern a week or so ago, the 4-hour on the S&P here. Same thing, NASDAQ. NASDAQ's even in a better situation. It would depend on what side of the market you're on. But, from a pattern perspective, this is exactly the type of thing that we've been talking about. The only possibility for what we're looking for. So far, we're, 3/4 or more of the way there. We just got to go to here. Come down to the 26.26, and then we'll take a look, because this is where we then start to look at, okay, if that's our obvious target, well, then we're looking for stuff like this. HSI is in deeply oversold, but this is another situation here where HSI, the reason why we wait for it to come out at a pattern, especially on a pattern retest, is that it's an early signal. And when it's these deeply oversold, you got room to run. And we're trading here, we're ticking down 59, 58. I mean, this is, like I said, you're still 33 points away from our 1618 target. That's where we're headed. That's what you got to plan for. NASDAQ, same deal, 4-hour. Big pattern, retest, type 2. This case is a little bit tighter to the target 1. Look, there's our target 1 here, target 2, a little more responsive off of that. In this case, this 1618, that's all the way down. It's 66.38. We're still 30 points there. I mean, that we could be talking that in 10 minutes. Or lower. And again, look at where our HSI comes in on the first time. Pink HSI arrow. Do not be crazy if we see this all the way down to 64.80 later today. This would be the big flush out. This would be an ideal confirmation of what we have been talking about from a harmonic pattern perspective. As I've been saying, the old adage of markets make lows in October, confirm them in November. Well, those November, that retest it failed, didn't complete the full retest of what we know, which is this. So down in here, we're at just the same levels we've been talking about for a couple of weeks since this pattern completed back in right around 2 weeks ago, 2.5 weeks ago. Just a lot going on. And again, we'll take this as the minimum because as we've been saying, the larger time frame, the daily, the monthlies, this is where it really starts to get going. And that's why whatever happens on this next test has huge implications. If this is really going to fail and trigger, get going like we've talked about. Here's your all-time 1618 on the NASDAQ 100. And again, as we said this, just this week, this is a monthly, even an all-time. There you go. Let me bring that up. 1 second. I got to keep my eye on the S&P. Anyway, this is the long-term dynamic that we've been talking about. And again, the monthly close is going to really trigger this. This is already, if we've gone back and forth on this of saying, okay, is it a monthly or a weekly measurement basis? Monthly or quarterly? Quarterly. It's all the way up here. And you have to look at what this individual bar does. Biggest one we've seen. It's the biggest candle we've seen since the 2000 bear market. I mean, let that sink in for a minute. Something is going on here. And I want you all to wake up to it and get on it. Because this stuff is just screaming to us. You go to the monthly. Okay. We look at this monthly close. We take out the low. All right. And just by standard price action definition, this thing is a major continuation. And I said that all along. I just want to just re-emphasize how critical these impending changes are unfolding. And so again, if that's the situation here and we get this thing to bust out, especially bust down on this retest, I just want you guys to be aware of this larger possibility that this 382 at 5100 could become real relevant really fast on, with continued days like today. It's not just today. It's been the last 2 months. And we can just draw a trend line off that top down to that 382, a simple 45 degree, something smooth, not too crazy, but within that time frame. Now we know that bear markets tend to have a bit of a steeper slope to them, but even if it's something maybe not that active or that strong, but 60, something, that encompasses plenty of time for any consolidation. But again, we are looking at individual monthly candles right now for the clue. And with what this retest is back on the 4 hour, okay, that's what the red line here, right? That's your retest area for the 4 hour level. This violates, that pattern violates, okay, then you shoot the gap. Then this becomes, then we start playing for the acceleration to 5,100 for the first quarter. That's where that's just how severe this thing is. A couple questions. Guys, I'm going to be out of here in about 15 minutes. It's going to be a short session today. Yeah, I saw that. Hey, Wolfram, good morning. Yep. Hey, Nick. Yeah, I heard that news. Nick's bringing up some news event. They arrested the daughter of one of the big Chinese firms. Yeah, guys, I hear you. Look, there's a million fundamental reasons why we can say this market's turning. But if we don't have the measurements and we don't have the harmonics behind us, okay, we can follow those stories, but we need price objectives in any market environment, and that's what I'm trying to focus on the most. We've talked about this 4 hour crab pattern, not only the way up, but the way down. And on Monday, Tuesday was really where we focused on the way down. This crab pattern fails here, there's just nothing. That's why today where we are, and I will also stress, and everyone take note, how severe this rollover has been. On Tuesday, I said the last event of any type 1, the completion of a type 1 is the violation of the trend line. And boy, did that thing crack. I mean, that thing just, that was it. That's the kind of thing where we get that, when you see that, you're automatically then projecting yourself back down for the full retest. That's the type 1, type 2 framework. The only way you're going to understand that is by learning how that type 1, type 2 comes together, and just kind of getting some practice with examples like we've done. So I recommend, we've had some intense sessions the last several weeks, last 2 weeks in particular. Look at all, go back and watch those last Thursday, last Tuesday, this week, Monday and Tuesday, exactly what we were saying. This whole thing is unfolded on this 4-hour time frame in an ideal fashion. And now what I'm trying to say is, look at that on a monthly. This is where the larger comprehension comes together. You know, for today, right now, we're looking at 66.38. That's the exact 1618 down here. All right, and these are minimum objectives. But the one thing that we don't have yet, and let's bring it up again, look at our HSI. Look at our amplified. This is the kind of situation where when you're sitting there, if it's a 4-hour or if it's a 5-minute chart, okay, this is the kind of confirmation where it's early. So until that confirmation is demonstrative, rolls out, comes out of the zone, we're really not, there's not much there. And so you got to keep that in mind, that there is just a lot happening. We need to confirm this kind of stuff. And still, until we pop out, that's the event. That's what we're waiting for. But a lot of times this can accelerate. And if this thing does not respond early this morning and we keep sliding, I would look for this as low as 64.80 to come back and retest the stop. It's just the nature of that crab pattern. So keep your eye on that. Take a couple questions, guys, if you have them. Like I said, I'm out of here in 15 minutes. How will this affect currencies? Well, the currency situation is really just about the dollar that we've talked about. That's a good question, trader. But look, again, this was from a larger perspective, this dollar index is undeniable. And it's defining overall path of currencies. And as we said since August, we got that monthly trigger right there. And then we said, all right, this is going to come back and retest that 1618. And so that strength on the dollar. That's why, even though we've seen a lot of fluctuations, you know, this minimum objective on the monthly, the target here, really providing kind of that insight. How far will the dollar go? Everyone talks about a strong dollar. I'll tell you, 99.136 is our minimum objective. That's how when we get into these crazy environments, and I think news stories like the one you cited, yeah, that means something, but we need to generate it. We need to convert it into a price decision. That's why it's so important. So let's focus on that. And that was the takeaway Monday of how important the larger monthly time frames basically are dictating most of what we're looking at now. Here is Treasury. It's a UST bond. I never look at this, okay? But again, I just want to show you guys the interest rates are the big story, and you go through even the monthly futures charts on interest rates, and that was one of the things I brought up in the monthly report. You look at these interest rate charts, they've all topped out. They've all got deep crab patterns on monthly basis or quarterly basis. I mean, it's fascinating, but we have to respect it. Here's the other one. Okay, here's Euro. And again, and I'm going to go into a couple of the new, well, let's look at one or two of the new pairs, but Euro on the daily or weekly, even on this last little ditch up here, 125, it was the weekly. Right up in here at 125. Big levels. Another crab pattern. But even on Euro here, looking for, we finally have this to come down into the two levels, target 1, target 2. And we're still looking for a bit lower, 112, 111. But again, we see the levels kind of outlining most of the critical markets we need to follow. And then, finally, of course, crude oil, which has popped in recent days. I'm looking to sell it, continue to sell it. That's what we left on Tuesday, looking to sell. Yeah, with a crab pattern right here. Let's see if it pops up. Oh, a bat. I knew we had a pattern right there that we left the session at 54.81. This is the exact kind of thrusting impulse patterns that we want to see. Why? Because our target on crude oil now is $43. Everything's pulling lower. And do you see this? How these targets, how even on this one, okay, it started really a month ago or more, just kind of blown away by this pullback where we were looking for something there. And I mean, it went straight under 50. There's nothing really down here till the 43.92 level. Again, these are minimum. That's a minimum reaction. So with that, it's still going to kind of bring greater force to the trend. And until I see an HSI trigger, look, here's on the weekly. Look what HSI did. It's deep oversold. That's going to take time to get out. And when that goes sideways, or the longer it spends in there, the deeper this price accelerates. That's one of we've seen that many times. And HSI has been a phenomenal tool. There's a lot of relationships that are I like to show in even more detail, but the critical aspect of HSI that we have to know. One, the arrow will tell you where it comes out, but if you're looking at the indicator itself with the price action, the confirmation doesn't come until after it's out. So we're deep in that area. Yeah, that's in a deep extreme, but price is still trying to get out of that extreme. And when it does, most cases, it's still going to stay in that trend direction. So crude oil, forget it. 43.92 is our target. And like I said yesterday, that we were, or on Tuesday, that up at 54 bucks. Even though this thing has dropped tremendously, still, these are the exact kind of patterns that will develop halfway down, 2/3 of the way down, that mark phenomenal continuation opportunities. We're still, notice this is still type 1, type 2. Type 1 to the 382, come back, type 2. Hey, look, there's a little confirmation there. Our expected return is target 2 because of the confirmation comes down here. All right, these are great trades. Great trades. 886, 54.18, 382, 52.59. But that's the sequence. And again, so back on what we're doing with the markets is that we're in the final type 2 return. We're returning to retest the type 2. Couple more. Hey, Richmond, how are you? Richmond, you're a heck of a guy, I tell you. I won't. I'll leave that for another discussion. But boy, you are impressive, and your father as well. You guys have a heck of a history. I would love to feature you sometime. But I'm also very inspired by how you've taken to the harmonics and how much you're studying. So keep the questions coming. Really, really impressed with what you're doing, my friend. So keep it up. So let's look at gold. You want to look at gold? Gold had that this deep crab, and here in the deep crab, we talked about a little bit of a check back. We're showing another deep crab, but that's not the one I want to focus on. Let me remove that. I want to focus on the one we talked about on Tuesday. that we had the confirmation. Really nice. Look, remember that confirmation? That was Tuesday. Now, here's a situation, Richmond, and I definitely want to kind of speak to you directly because I think it's something you're really tying the strategies together well. The charts have been really good that you sent. Our expectation on that is for type 1. But I want to kind of point this out. We do have another confirmation here, but this is a situation where I know you were lining this puppy up. We got to monitor that trend line. And even as I said with the S&P, all type 1 reactions when they come off that initial pattern, and this has confirmation, that's ideal. We still have to maintain the trend line, and we can stretch it out. We can make it, I say 45 degree, whatever it is, the primary, the unfudgeable line, let's call it. Like if you guys are fudging your trend lines and saying, oh, that might be a trend line or that, no, it's got to encompass all of the tops like that. So with that understanding, okay, I just want to point this out, that you get that move up here, our confirmation, everything, our clear variables telling us right in here around 145.50 area, just above the terminal bar. Okay, and we got a nice little reversal down to a little under 140, no follow through. Can't get out of the zone and actually look at what happens and what pops up. A little HSI trigger. Now, I just want everyone to kind of take that not so much as an immediate, oh, that's failed, but look at that as saying, all right, it's a warning signal that if I don't get the continuation through, then I want to adjust my stops. And that's the situation here. Now we're right back at another retest right there. And this speaks to the kind of the principle of two opportunities on each pattern. But this is a common, I think a lot of people find it frustrating. But when you get that kind of move, really nice move position, and then it violates the trend line, if it breaks out, goes sideways, that's where you have to get out and look for the reentry or look for another retest. Okay, I'm still looking at this up here. That's 146 area now. The prior one was 145.50. So you're still in the same optimized area where the crab really completes up in here. Okay, but I'm still only looking for a type 1 move. So if that's one, we got a pretty strong bar right now on the hourly, and we're about 3 minutes to the open. I'm going to be out of here in 4. It's like this. Okay, I would be looking to the top of the hour because think of it this way. This is your check back. So this is a second shot, and that's how the best HSI confirmation works, where you get the arrow. Sometimes it's right away, sometimes it's several bars. Like look at the first test here. And this is every harmonic pattern zone. All right, we talked about this on Tuesday. You get the arrow, there's the check back, and there's your zone. You use the actual bar that retests as like a terminal bar. So this is one big terminal bar of that HSI right there. So here's the thing though. What do we know about terminal bars? We wait till they close. So on this one, I'll wait for another 32 minutes until we get that to close and see what happens. Because if this thing blows through, well, that's your obvious failure. And that's why we look at it that way. HSI was designed early. I mean, here's an immediate check back on the downside, on the bullish side. Okay, it hits, it checks back within 2 bars and goes. That's the thing where if it doesn't happen right away, all right, and then it does that check back, you have to wait for that bar to complete. But take a look at that. I am only expecting a minor pullback on gold because I'm bullish within this framework of the weekly. And we talked about this. I think we talked Monday that we are just within this pattern, this bat pattern. And check this out. HSI and amplified both heading up. So nothing really here except for, well, we had a little kiss of the HSI last week, but I still said on Tuesday that even in this check back, we have to wait till the weekly close. And that was the other reason why I was still favoring it up on the week. And so if you were, from a larger perspective, if this thing's going to roll over, it's not going to be till next week. And I'm still favoring that 1265, 1270 level by expiration. That's 2 weeks away. 1 second. All right, guys, couple more. Hey, Rudy, I know I didn't get to your question Tuesday. Procter Gamble. Rudy's our registered investment advisor, does stocks, always has a great pattern for us, and I appreciate it, Rudy. Procter Gamble on a monthly, weekly. Let's go weekly. Weekly. There's a lot of these patterns. You had a great one. What was that? Herbalife was like a huge, amazing crab pattern on the monthly. Here you go. All right, folks. Well, we know that it works in stocks too, even in long term. So if you want to manage your portfolio based on harmonic patterns, go with stuff like this. Crab patterns on the weekly. And probably one of your favorite shorts so far, the bat and crab playing out together. So what's that? That's not on a weekly though. Daily? Let me see. Did you send me that chart? I think you sent me that chart. Why don't I bring it up Monday? I mean, I don't know what the other one that you sent me was. Let me see if I've got that. Let me see. It's a bat and a crab, huh? I'll look at that. I know you sent me that chart. There's the crab, but you know what this is? Look, you have another HSI trigger on the weekly. And look, this triggered 2 weeks ago, and that trigger's on the close down here. But look, that's a perfect check back. So that unto itself, and this is just a type 1 crab, pretty remarkable linear move. All right, and again, violate the trend line, you start the return. And that's not a crazy assumption, folks. But we'll look at that right there on Procter Gamble at 94 bucks. Get me some puts. I like it. Couple more. Market's falling down, folks. It's 932. Let's go over there. Oh, it's a previous type 2 bat. All right, we'll do. Yep. And let's go back here and let's finish up. So market is dropping. Again, 26.26 is the big target for the day. And those are ugly, ugly monthly bars, weekly bars. So here we go. Yeah, look at this. It's going to take out that low. Here it is. And then just pull up the 4 hour. 26.26, folks. Down here. And that's, okay, now 25 points from where we are. That's a huge move. There you go. And then again, just get your amplified RSI up, get your HSI up, and look to the top of the hour, because think of it this way. This has got 25 minutes until the hourly bar even closes. That has a whole lot of work to do to get out of that zone before that even happens. Remarkable. So just get on it. Plenty of time today to take advantage of this kind of stuff. The only thing that I'm going to leave you folks with is that When we get down here, is there going to be a valid type 2 reversal? It all depends on what where HSI is by the time we hit that point. If we flush through here, trust me, 2575 will be tested. That's how it works. Goes as low as this type 2. Those type 2 can be sloppy retests. And it's a deep crab also, so we know that that thing likes to go below its zone. And we're going to wait and look for HSI. But this is the larger setup, and I think at a minimum, okay, even if the disaster scenario is unfolding in front of us, right in front of our eyes, which it seems like it is, there's still going to be plenty of time to take advantage of this stuff. It's going to take months. And my final point, I'll leave this with you guys so you know kind of the premise of a lot of the change and a lot of the kind of the reaction that I'm anticipating is that once this cracks, all right, and if we really get going out of here, we're just looking for a big 1618 impulse down. And it's like that. 2270 would be our target. I'm taking this in chunks, and just to make it really simple, we're looking today on S&P. That's at 2626, 2625. And we'll look there immediately. We'll look here if that's exceeded, because again, as low as that 886 at 2575, that would be a reasonable low for December. And then maybe another rally, but then once we crack that, this 1618 impulse is the only objective we will consider once we take out the lows. But everything's focused on up here for now. We'll get to this, how we handle this as it develops, but again, everything that we have to do, all of our assessments, despite the news and the environment and everything that we're talking about, has to be based on patterns, the structure, type 1, type 2, and final note as well as for some of you that didn't make maybe the Monday or Tuesday session, this was the other big development that I've been highlighting in RSI and regular and amplified of such a situation where on the monthly basis, okay, this thing has come out of the zone in a way that we haven't seen in 4 or 5 years. And as I was saying on Monday, when we look at these major reversals out of the zone, okay, they don't trigger until they come out. And now, for where we are, all of them back at the 50 gave you a minimum 50 level. And that was what happened 2015. All right, so that's why all of these levels today, the 2630, 2625, the NASDAQ situations, if these are all just kind of a really strong, severe pause like 2015, you're going to have to hold it here. That's why there's only 2 scenarios in the whole situation of what we're looking at. And you know, the other example is 2000. So when we come out of these zones, and these are complex structure, all right, they have a tendency when they really get going, they're going to go all the way back down to the other extreme. And what do we know? This is the final point. Once that 50 level is triggered and this thing breaks down, okay, this will accelerate back down to that level. So again, look at the monthly report because it lays out the big numbers to pay attention to relative to these 4-hour and hourly time frames. Really easy to get yourself turned around in such a volatile environment. This is, you know, just even since we've been talking, you know, S&P has traded down, what, 15 points and snapped back 10. That's S&P 500, not NASDAQ. Those are big moves, folks. So again, great market to trade. Just let's line up get all of our numbers together, understand where we are within this framework, because that's the only way you're going to be able to make decisions in such an environment. One or two more. I got to roll here at 9:40. And again, really great discussions this week. And I can't stress enough, get into the gold member section and review these sessions on the weekend. I know on Tuesday I went pretty fast. I covered a number of markets, this scenario, and a lot of currencies on big term monthly levels. So look at that on Monday, Tuesday, because a lot of the big markets we've talked about, crude oil, are telling us why a lot of these targets are lower. And so if you're a day trader and we know the larger trend is still going to persist lower, we need to favor that sell side. So take a look at all of that. You guys have any questions, you know where to find me, Harmonic Trader, at Harmonic Trader, and get with the software. If you're a gold member in here and you have not signed up for the software, please get the software. Software comes with the membership. So if you have any questions, send me an email. All right, folks, let's go get them today. We'll see you on Monday. Great trading. Have a great weekend.